Hi everyone, welcome to Crowd Forecast News, episode 165 for December 18th, 2017. Today we will be discussing the 221st weekly report, which you should be seeing on your screen right now while I'm talking. If you haven't had a chance to download this yet, just go to TimingResearch.com and you can get the PDF there. For those of you watching live, I do have the live chat section open of the YouTube page, so you can add any questions or comments there during the show. My name is David Kosmeter. I'm the creator of Timing Research, and I have Matt Buckley back to moderate today. I'm going to go ahead and turn it over to him.
Thanks, David. Let's go ahead and get airborne, folks. Apologize for being 5 minutes late. That's not me. I like to get airborne on time and land on time. So we'll. I think Barry's working on some comm issues, and he's going to fix those offline. So if Barry joins us, he's joining us from Top Dog Trading. We got Simon Klein of TradeSmart 4X. Good to see you again, Simon. Neil Batho of TraderReview.net. And Jim, are you up?
Yep, I'm here.
And Jim's here from the Options Professor. All right, gents, we'll skip Barry for now until he's up and ready. But Simon, Neil, Jim, in that order. Why don't you kick us off, Simon, with a pretty good executive summary of who you are, where you came from, and what you're doing right now.
Wow. Anyway, Matt, nice to be back with you. And thanks, David, for having me on this show again. Can you guys hear me?
Yep.
Okay, great. So I'm the CEO of TradeSmart, and the website's TradeSmart4X.com. I've been a professional trader for over 12 years now. And I started my career actually straight out of university working for Credit Suisse in both London and then in New York, and that was in 1996. Over 20 years ago. Wow. I started trading as an equity trader, generic trading in Philadelphia in 2005 after taking the Series 7, which we needed to do back in those days. I think you still need to do it now to trade someone else's capital. So TradeSmart4X.com, we take people through the whole development cycle to become a professional, successful trader, from teaching people at the beginning how to read the charts professionally, teaching them how to run a trading business, working with them to develop their own personalized trading plan to fit their own personality and lifestyle, working with them to prove that that trading plan works. Then we also provide a trading room every day. We trade live, and anyone can come and join that. And that's basically what we do. We take people from the beginning, and we hopefully at the end of the process, they're successful traders.
Awesome, Simon. Welcome aboard again. And then Neil, over to you, my friend.
Thanks, Matthew. Yeah, I used to be a broker back in the late 90s, and was real excited out of college doing it. They gave us a lot of free food at lunch when the mutual funds would come in and sell their products, so that was great for me. But yeah, you learn really quickly when you're a broker, and in the training they tell you you're just in the business of gathering assets. And after that, you get a little sort of bummed out, and they just want you to hold the money long term, never sell for your clients, these types of things. And it wasn't really strategic enough for me. It was really just a sales job in many ways. And so I got out of that, did some business consulting for a while, and then I started Trader Review, and now I use the same charting that I learned through my office, which is point and figure charting, which is fantastic charting with the X's and O's. Basically have timed every market crash. And back in history, the indicators will time all the crashes. And now I use the Ichimoku Cloud, send out alerts for my clients every day, sort of a tight knit portfolio of around 3 to 5 stock and option picks.
Awesome, man. And Jim, how about yourself? A little bit about your background and what you do at the Options Professor.
Yeah, at Option Professor, basically I provide all the content for them, and basically what that is the content for education. So not a lot of market calls you're going to find in there, buy this or sell that. That's not what they do. But what the tapes do is give you the knowledge on how to do the option writing strategies for cash flow, and how to do the buying strategies such as long calls and long puts, of course, and then, of course, the insurance strategies like collars and married puts, which are a way for people to stay in the market and feel like they have some parameters around their equity rather than just waking up wide-eyed hoping that we've melted up or melted in their direction. So these strategies are very helpful in conjunction with positions and that's what the DVDs help people out with.
Awesome, Jim. Appreciate it. Welcome aboard. Folks, real quick, Dave, thanks for having me to moderate this esteemed panel of 500-pound heads here. My name's Matthew Buckley. My call sign's Whiz. Flew the Hornet for about 15 years for the United States Navy. Graduated from the Navy Fighter Weapons School, which many of you know is Top Gun, and also flew 44 combat sorties over Iraq. So got to do a lot of cool things. But when I was a young officer, I taught myself how to trade stocks and options in the early 90s, right around the time Al Gore invented the internet. Heard of these things called options and said, why am I trading stocks? And never did that again, because why buy the milk or the cow when you get the milk for free? Got a chance to fight with the Blue Angels, did a bunch of cool stuff. But what really worked was me applying what I learned flying fighters to my trading and also to the business world, having a strategy, implementing tactics, contingency planning, asking what could go wrong during a trade, during a mission, before I even do the damn trade or go on the mission, instead of freaking the hell out when that happens. Been working with a whole host of companies. Where was I? Houston a couple weeks ago, working with the #1 death care provider, death care industry. So I've worked with companies from the Fortune 1 down to mom and pop convenience stores in Minnesota, helping them improve their execution. But more importantly, that really helped me improve my trading. So I popped up on the radar of one of the largest vol arb firms in the world. Peak 6 Investments, headquartered right there in the Chicago Board of Trade, helped build the retail brokerage options house, helped build a hedge fund, acted like Valentine out of Trading Places, but more importantly, managing director of strategy for Peak 6. And then I was the founder and CEO of the Options News Network, ONN.TV. I mean, John and Pete and Jerry do a good job of paying lip service to options, but CNBC still treats it like something else. I mean, they'll move on to Bitcoin before they really get into the options world. So that's me. And let's go ahead and get airborne. So we'll go to the top of the order.
Barry, can you hear us now? Barry, are you there?
Barry, you up, man? Nope, he just dropped off. All right, guys, let's go ahead and get airborne, and we'll keep that Barry, if you get up, man, just give me a heads up. Let's go ahead, because we don't want to sit here all day doing this stuff. Top of the order here. So Simon, where's the S&P going to close in your opinion? Compared to the open today by Friday. What's your take on the market this week? Higher, lower, or unched?
I would say kind of 50% higher. But it could potentially, we'll go into the reasons next, but I'd say still higher. So it's got room to move higher.
So at least 51% higher, right? You're 51 delta higher.
51, okay.
Because if it's 50, we're going to be unched, right?
51%.
So there you go. All right, so you're a little bit higher, but not a big delta there. Neil, how are you feeling for the week? Higher, lower, or unched?
I think higher, about a 65% chance higher.
Okay. And Jimbo, how are you feeling?
Well, I'm thinking that it would be higher, but I'd probably only be at about 55% because of the overbought nature.
Aha. And as I often say, getting last is awesome because I get to tell everybody they're wrong. Well, actually, you guys aren't in this case. I'm higher, and we'll talk about the issues here in a second. And I'm right around probably, well, I'm going to steal your delta. I'm going to go with about a 65 delta as well there, Neil. So feeling pretty strong about that. So Simon, let's go through what is on your radar this week that says, hey, you're about a 51 delta higher. What short-term events this week tactically are making you feel that we're going to at least grind a little bit higher?
I'm going to share my screen with you and tell me when you can see it. I'm a technical trader. I basically just read the charts and they tell me everything I need to know about price movement. So we've been saying this the whole year. I've been long the market since January, basically. I'm still long the market, just riding it the whole year. So basically, we're in an uptrend on the monthly chart, we're in an uptrend on the weekly chart, and we're in an uptrend on the daily chart. And we're at all-time highs. We made all-time highs today again. We just hit new highs. So the trend is your friend until the bend in the end, and we continue to buy pullbacks until proven otherwise, until the trend changes, or until we get a massive kind of climactic move, parabolic move to the upside, which will probably be the end of the move up. That hasn't happened yet. It's still grinding, even though the kind of it's starting to maybe look like it might be ready to have that final surge to the upside that may put in a top. But at the moment, you know, the trend is your friend. Don't fight it.
Love it. Those Wall Street isms are isms for a reason, because most of the time they're true. So no arguments out of me. Neil, what's on your short-term radar this week that's giving you a 65 delta higher?
All the indicators that I use are up. I mean, I use the bullish percent. What that does is on a scale of 0 to 100, it'll say what percent of stocks in the S&P 500 are near-term buy signals. That's in the high 70s. That hasn't budged any lower. And then I look at another one called percent of stocks above their 50-day moving average, and that's also really nice. Oh, I'll just share my screen here. Put that on there. 1 second. Can you see that up there now, this chart?
Yes.
Okay, yeah, it just says SPX A50R. So this just shows what percent of stocks are above their 50-day moving average. I can go here, can change it to the 200. Also really nice. But these are really high levels. So like we were saying, that last move, at least temporary, is going to be a really huge jolt up. And that'll be a good time to take profits.
What? Okay, you know what? I'll let Jim go next, and then I'll jump in. Jim, how about yourself?
Sure.
What's on your short-term tactical radar?
Well, the short term is really just an extension of the longer and intermediate terms. You know, Trump is talking 4 to 6% growth, $2 to $4 trillion coming back into corporations for spending. New highs on the transports today. Russell's about 10 points off. VIX has an inability to stay above 12 or 13 for the last year. Money jamming into the ETFs and index funds. 10-year note can't get above 2.6. These are all the things that have been sending us higher, higher, and higher. And so obviously with new highs, it's kind of hard to step right in front of it. People who are out of the market probably feel like a guy trying to jump on a track with Bolt already running 50 yards, or trying to hop onto a freight train that's going, 200 miles an hour. So if you're out of the market trying to get in, it's a rough racket. But there's no evidence of a turn at all. And with no evidence of a turn, it's a rough racket to go on the sell side.
Yeah, well, not only that, but Jim, you'll appreciate this as an options guy, is, the whole being short volatility, being short VIX all year has, it's printed money, except for the times it hasn't, right? Whether it was the failure to repeal Obamacare, or the Jim Comey memo, or the fire and fury comment, or, the random, and I tell my members at TGO, all the pullbacks year to date, guys, have been political. You look at a chart of the S&P 500, there hasn't been one massive pullback anyway, but everything, and they're almost all gone off my radar here. This was Steve Mnuchin and Gary Kahn have to resign because Trump's a racist, and he said there's good Nazis, which he didn't. This is the fire and fury comment from his golf course in Jersey that he's going to nuke North Korea. There's the Don Trump Jr. emails and committed treason, and then we have Obamacare and the Comey memo. Other than that, folks, this thing, you just can't keep it down. Now, the New York Fed came out, what was it, today, this morning, whenever the hell it was, it said, 4% GDP. So, folks, on my radar, let me give you my answer. I'm a 65 delta higher for the week. I think the vote's coming tomorrow on tax reform, and you could be forgiven for having a little bit of whiplash, because you got this. You ready? Where is it? SocGen. Every bit of good news, including tax reform this week, is priced in. Meaning, and not to get in the innards of it, they're like, hey, this thing's, it's already, all the goodness is priced in. And then Goldman's going to roll in with hey man, if you love 2017, you're going to love 2018. So I think this week is definitely going to get higher. He's going to have a nice big ceremony of signing tax reform. And then he's already talking about moving on to infrastructure spending. I mean, he's already trying to put tax reform to bed. And I think even in the signing ceremony for the tax reform, he's going to start throwing out even more stuff. So and Jim's got a good point, man. People are at, hey, you trade Whiz. Can I get in now? I'm not even going to mention the B word, where we all have to do a shot. I'm just talking about regular equities, man. This thing, it might feel to some of us old folks like we are way over our ski tips. But if the tax stuff eventually does kind of trickle down, man, I mean, just speaking personally, that's money in your pocket. So and I'm an Eeyore, folks, just based on North Korea, Saudi Arabia, Iran, maybe getting, punching each other out. There's a lot of potential bad that can go wrong. And if those bads go wrong, we implode. I mean, that'll be your 10 to 20% pullback. Other than that, man, we go up. So I'm a go up. I'm a 65 Delta. I think you just can't. You can't. The trend is your friend, like everybody knows here. So, all right. So we talked about higher or lower. We rated our confidence there, and we more or less talked about what is on our radar for this week. Anybody want to jump in on anything I said before we move on to the next question?
Yeah, I just want to say about the political stuff is that, I mean, the more you move towards peace, the more the market rallies like crazy. I mean, if you look at the late 90s, there wasn't really much happening in the world, after Gulf War I, and the market, went ballistic.
Correct.
And so I think if you have a government that is at least talking peace, and in Trump's Jerusalem speech, how many times did he say dedicated to peace?
Correct.
He's saying it. If you say peace, that's obviously a lot. That's obviously bullish for stocks.
And it's a good point, Neil, along those lines is even the Iraqi government, it's a little creepy that the day the Iraqi government mentioned this last week, that a dude tried to blow himself up in the name of ISIS in the tunnels. But that's what we're going to be facing now going forward. We've obliterated ISIS. And I will tell, fortunately, I went to the Army-Navy game a couple weekends ago with my boy Jack. Navy lost. We won't talk about it. Spent a lot of time with a lot of heavies who, after a couple drinks, man, it's night and day between the previous administration and this one. The President of the United States and SecDef have said, take the gloves off and turn our enemy into hair, teeth, and eyeballs. And it's worked. So it's a great point, Neil, that when we're not seeing all this horrific news about Afghanistan or this and, our current Vietnams, peace is good. So I couldn't agree more. All right, let's press, because I know we're going to bring up some of these issues probably a little bit more. David, can you scroll down? Let's go to question number, where are we? We already did 1, 2. There's a lot of math. I think we did a lot of these questions tactically, so let's go on to number 4 there. Because I always like saving time for a lot of getting some trades out of you guys. So let's do this one. And Barry, are you up this frequency by any chance? Earth to Barry, come in, Barry. All right, guys, we'll go ahead and press again. So, Simon, taking a look at question number 4 there. In your professional toolkit, what methods or techniques do you use to overcome the emotional aspects of trading? I know you probably have a lot to say about this.
Oh, that's a great question. I can go back in my own personal development and everything that I had to do to overcome all the hurdles to get where I am now. And I basically use that to help coach people that I coach to overcome whatever issues they're dealing with as well. But I think if you have a great understanding of how to read the market, it's not just, oh, I've got a signal to buy, and you don't really understand what it's based on just because some indicator gives you a buy signal, whatever that indicator is, or you have a moving average crossover, or whatever it is. Green light you buy, red light you sell, but you have no understanding of what's going on behind the scenes in the market. You don't understand in depth how price movement works or the mechanics of price movement and price action. Then you're trading scared because you don't have that level of confidence that you need. So I think to build that confidence, it comes from experience in the market, but it also comes from understanding how to read the market at its core, at its foundation, what's moving price. And it's all about supply and demand. So if you understand that and you understand what that looks like in the market, and you come to trading from when you're confident in what you're doing, then you can trade without that fear that a lot of people have, because guess what? Most people try trading, but they don't have the level of expertise that they need to do it. It's like trying to drive a car when you only know how to press the accelerator. Most people start trading like that, hit the accelerator button, but they don't know how to hit the. Imagine, and this is kind of an analogy that you can use. And this is why a lot of people, I think, fail, because preparation equals confidence. Confidence gets rid of the emotional issues that a lot of people have. If you have confidence in what you're doing, you can trade with less emotional baggage, so to say. So what you need to do is basically build that confidence up by understanding how to read the market and actually training in the live market.
Yep.
Once you know, the market is a great feedback mechanism, because if you pick an area, say for example a demand zone that you mark out on your chart, and you think to buy in that zone, and every time you mark those zones the market goes straight through it, you're obviously doing something. Use the market. The market will be your best mentor, so to say.
Sure.
If you're open, you don't need anyone else. You just need a framework in which to develop as a trader, and don't start trying to put big money on the line. You know what you're doing.
Correct.
So here's the analogy again. Imagine your friend's driving a nice Ferrari, yeah? A friend of mine just bought a Ferrari, whatever. I was in England recently, and told me he bought a second-hand Ferrari, whatever. He says they keep their price. He just recently sold his previous car and actually made money on it. So I guess there's a market for, he thinks it's a good place to put his money and it maintains value. Anyway, so imagine I'm driving down, down the highway with him, and I don't know how to drive. And he says, here, come, just sit in the seat. He's driving at 100 miles an hour, just say, and he says, come sit in the seat. And I start to try to drive, and I've got no idea what I'm doing. That's pretty scary, isn't it? But imagine I'm an experienced driver. It's a much different experience. So it's much the same with people trying to trade. They learn a little bit. They may read a book. That's nowhere near enough of what you need to do in order to get into one of the most competitive. I mean, listen, I work with some of the best traders in the world when I was at Credit Suisse and other financial places, and everything's planned. They're not shooting from their hips like most beginning traders are. Without, it's an emotional roller coaster ride. So the way to overcome the emotional aspects is learn how to do it the right way.
Well,
and
I
then once you know what you're doing, you're confident. You're not scared to take trades.
Correct. I think one of the biggest words I pulled out of, you nailed everything, and I think we're all probably going to echo the same thing, but one of the biggest words you said in passing, because it's natural to you, is a plan. I mean, most people, most retail traders wake up in the morning, they put on their bunny slippers, take a drag of coffee, and they're watching what I call Comedy Central, CNBC, and that's where they're getting their stuff on, or they're even putting real capital at risk. Simon, we didn't go from reading a book about the F-18 and run out to the flight line and jump in a jet and try and get airborne. That's how you die. You actually got to, we go to the simulator building, man. You open a paper trading account and you get in there and you pound the hell out of it until you're not going to go kill yourself. So I appreciate the P word for planning. So Neil, what can you add to that? And how do you ditch the emotions and become a better trader?
I guess one of the things you think about is, if I'm thinking this about this particular trade right now, how many other thousands or millions of people are thinking the exact same thing that I'm thinking, right? I mean, something's coming right down to support. How many people have the guts to buy that support, and how many people are going to wait for that bounce so you never get it right on the support? Or, here comes the resistance, how many people are going to hope for the best and just keep holding or sell? I still remember, back in high school or even earlier, a teacher said, don't be afraid to ask a question, because probably a lot more people are thinking of the exact same question you're thinking of. And I think of that in trading. Who else is thinking this? And all you have to do in trading is just be a tiny little bit ahead of everybody else, even if it's just a day.
Yeah.
You look at a great stock, other people looking at it, they think, hey, I might get into that. Let's see how it goes. You just get in and it'll move. And back when I was a broker, are we gonna have time to show some charts later, Matthew? Do you want me to show those?
Yeah,
charts?
Absolutely. You can do it now too. Whatever you want, man.
Okay. I think I'm still on screen share. Is it showing this right now?
Absolutely. We got BPSX.
Yeah. So this is the bullish percent, and I remember one of the brokers that taught me, it took me to the first webinar on this. He said you have to have an operating system. That was his pitch to clients, and it's true. And this is like the operating system of basically the entire market here. And I'll just show you real quick. You see the 9 here is September, then ABC is October, November, December. So it's not exactly like this. Really, if it's long-term, if it's over 70% you hold, If it's under 30%, you just stay out. But you can also do a shorter one where you say zeros is out or O's is out, X is in. So if you look here, September, October, November, December, and back here, August is in the O's. And I'm going to go here to the S&P 500. Look here in the August, market does nothing. Bullish percent turns up in September, and you're off to the races. And really, one of the simplest things you could ever do is just look at the bullish percent. If it's X's, you're in, and if it's O's, you're out. I swear, I've been doing this a long time, and that's really, I swear, all you have to do in a lot of cases. And if it's an O's, don't try to think, oh, it's in O's, it doesn't count for me. It does. The technicals are deteriorating. The whole market's going to eventually deteriorate. So that's your overall look.
That's a great point, because I got to be honest with you. At peak 6, one of our tools was called the monkey tool. I mean, if it said this, you got long. If it said this, you didn't. Let me bring something up, and I know Simon hit it, folks. I don't know if you can take a screenshot or do something in this. I know my members in here that are attending, right? We usually do our weekly options live trade brief at this time, but all my members in here, they know this by heart, folks. Look at the top left of the slide here. Discipline, risk management. That's how you have superior execution, man. I don't know how many times out on the road giving a speech or something, oh, I'm in a trade, and oh, great, yeah, I'm a trader as well. And I'll ask them, hey, well, why are you in that trade? And then they kind of, why are you in that Apple trade? And they're like, like Apple? All right, that's not good enough. I have an iPhone. That's not good enough either. I mean, no kidding. After 3,000 hours in the airplane in the F-18, I still used a checklist. As a trader today, when you join one of our live trade briefs, I use this 7-step trade plan. So this gets rid of the emotion. Trust me, the ocean, the sides of mountains, are littered, unfortunately, with aircraft, and unfortunately with some dead bodies of naval aviators or Marines who flew past a certain point, whether it was fuel or distance or whatever. So the same thing in a trade. To overcome anything emotional, it has to be written down, and you have to stick to it. I mean, look at our step 7 in our exit plan. It's the Colin Powell doctrine, man. That dude had a nightmare as a young officer in Vietnam. So whether it was Operation Desert Storm, Bush the first said, hey, dude, get Iraq out of Kuwait. He said, you got it, sir, but before you leave, what does victory look like? When are we getting out of this? So if you want to take the motion out of your trading, I see it all the time. All these guys see it too as professional traders. Whenever we work with a retail trader, they're like, well, Apple's going against me, but it'll come back. Apple loves me. Folks, Apple doesn't even know who the hell you are and would steamroll over your house, your wife, and your kids if they had the opportunity. Apple uses 10-year-old child labor in China, and you think they're going to care about you? Come on. So I'll be honest with you, folks. To take the emotion out of trading, you have to have a plan and be disciplined. Know when a trade's going against you, when you're either going to, I call it adjust or eject. Right? The adjust and eject level in a trade. And just as important is to the upside. When are you going to get out of a trade for max profit? We have credit spreads, folks. I say if we see a 70, 80, 90% gain in a trade, I can't see the show of hands, but how many, I know you guys have done it when you first started trading, how many of you have turned a 70, 80, 90% winning credit spread into a 100% loser because you sat there and said, I'll just let it expire worthless. And then it blows up in your face. So that, and again, all of us talking right now, folks, we didn't hatch as professional traders, folks. We made these mistakes. Okay. So it's the whole, I'm not only a Hair Club for Men member, I'm also the president. So Jim, how about you, man? I know at the Options Professor, you do a lot of teaching. Yeah. Does any of that resound? How do we take this and make these guys better?
Well, the thing is confidence, in my view, is not only from being right when you buy something, it's also from defining your risk. So I think a lot of confidence comes when you have parameters around your investment. And that's where the collars and the married puts come in. And basically it gives you a discipline, so because you have some type of a floor or some type of parameter going on. And then also you can roll these positions and you can calendar them from time to time. But basically, it helps you to be confident because you know exactly where you're at as far as the risk is concerned. Where I think the lack of confidence can come from, you really don't know if is this the high? Is that the high? Should I get out here? Should I buy in there? And that's where you're losing confidence. And then if you buy a few trades and you're right, that may give you a false sense of confidence. So the parameter situation with the collars and the married puts, I think, is a legitimate confidence that you get. The other thing is right now, we're all looking at this thing like it's a new market because of tax reform and this repatriation and all this stuff. So we have to be careful. We're at 2,700, 2,800, 3,000 or whatever on this S&P, that this new market talk, you be careful of it, because in 2002, the new talk was we don't need any earnings on .com. We have eyeballs. Well, that new economy went in the toilet. Then it was followed by real estate, and real estate never goes down. And we found out in 2008 that was the downfall of that. And this time, what could be the downfall is everyone's betting that $2 to $4 trillion is going to be put into stock buybacks and increasing wages. And that may not happen to the speed or to the amount that people think. And that could be the come line bet that people are making. And then the rate could be when it doesn't really pan out that way. Because are these guys really going to get all these tax monies and buy all their stocks at the all-time history highs? And they're going to load up on repatriated money and buy all the highs of this market? And if the answer is no, then that liquidity could dry up. And that's where the collars and the married puts are going to save your butt.
Hey, Jim, do me a favor, because we have enough time. Give us, somebody just landed from planet Mars on Earth here. Collared, what's a collar?
Collars where you own a stock and you sell an out of the money call, and you take that premium and you buy a put, and now you have parameters on your stock up and down until those options expire. You can also do them on a calendar basis. If you want to do more of a timing strategy with that, you could have a longer term call and a shorter term put or something like that. Married puts are going to be where you're just looking for puts to buy against your stock. And of course, I always suggest you look for the far out ones, because sometimes you'll see a 6-month option that'll be worth one price. And then if you looked at a 2-year or a 1.5-year option, it would only be like 50 points more to get another 18 months of insurance. So I always recommend people look as far out as possible on their insurance, because obviously you want the insurance to last as long as possible.
Correct. And back before the earth cooled, I remember first getting into options, and one of my foots in the door was doing that collar tactic, because a buddy of mine introduced a costless collar, because he showed me, he's like, hey man, you could sell some upside calls and they could actually pay for that downside put. I'm like, where have you been all my life, and why am I not doing this with the current stocks that I'm in? It's free insurance, folks, literally. So make sure,
and that gives you and that'll give you the confidence, because you'll know exactly where your upside target might be, and you also know where the floor is. That guy's walking around the street a lot more confident than people who are whistling in the dark.
That's exactly right. That gave me the confidence. That's where some of that stuff came from, was being able to say, wait a minute, I have a safety net underneath us. Because folks, right now, let's be honest here. It feels like we have this Fed put since we've had Bernac and Janet. I mean, it just feels like this is everybody's going to get a trophy type of rally where there is no down, and that ain't going to happen, folks. This is a game of musical chairs, and eventually the music's going to stop. Hey Barry, did you?
I think Barry is working now.
I'm sorry,
Barry, are you there?
Yeah, I believe I am. Can you hear me now?
I got you, Barry. Welcome aboard, man. Give us a quick, and you can cover your bio at the end. Where do you think the market's going to end by the end of the week? What's your delta on it finishing where you think it's going to finish, and what's on your radar real quick?
All right, thank you. And yeah, sorry, I had so many technical problems here with, I guess, Chrome or something. But anyway, that aside, thank you guys for your patience. I really appreciate that. So, it's interesting. We gapped up this morning. And so as I'm looking at my charts, I'm a technical trader as well. I mean, I do consider news, fundamentals, that sort of thing, obviously, because I do believe that as good as technicals are, news still trumps technicals and can blow the crap out of a stochastic, an RSI, or a moving average. But hey, here we are again, gapping up a little bit. So right now, as I look at my charts, what I call energies, which is basically cycle, momentum, trend, all that kind of stuff, it is up. And so I do have to say up, even though it kind of goes against my gut feeling. But hey, that's what the charts are telling me. The only thing is that the trend is pretty darn extended, as we all know. We've been going on this uptrend now for just a crazy amount of time. But hey, the markets are going to do what they're going to do. And quite often it is going to be unusual. In fact, even part of what you guys were discussing with psychology, I wrote an article a few years back, and it ties in with both the psychological discussion as well as where I think the market is going discussion. And the article was called "Good Trading Must Be Unnatural." And the explanation for that, the logic behind that, is that most people lose money in trading, and we as human beings are herd animals. We are, well, like dogs and not like cats. And so we are pack animals, so to say. So our instincts are to go with the herd. Unfortunately, in the markets, the herd generally loses. So normally what we feel, it's just a guideline, but normally what our gut instinct is for going to be wrong most of the time. So my gut instinct right now is we're going down, and that's probably wrong. So,
so you think by Friday we're going to be lower than our open here this morning?
Oh, that's what I think in my guts, but I think I'm wrong. So therefore, I actually think we're going up.
Wow. Okay.
In other words, my gut is saying down, but my technical analysis is saying up. And back to the psychology discussion, what that means is I've got to play by my rules and not by my guts. So my official answer is up.
I agree with that. All right. And then we'll catch you up to where we're just leaving off before we get a good trade out of everybody. How do you take it? It was question 4 on the timing research report. We're talking about the emotion in trading, and what methods or what techniques do you use to overcome taking the emotion out of trading? Like you just kind of talked about. You said, "Hey, Whiz, I'm seeing this, but my gut's saying this." How do you do that?
Well, actually, it's interesting because I use the same type of analogy you do, that I have a friend who has a little 4-seater airplane. And I live in Los Angeles, and he'll fly me over to Catalina. And, you know, the guy's been flying for decades. So he's a fantastic pilot, very experienced. I don't even know how many hours. But anyway, he pulls out a checklist, just like you were showing. And every time before we fly, literally this piece of paper, and he goes over it. I'm like, Don, really? You got to pull out the freaking piece of paper and look at it every time? Don't you have this memorized by now after decades? And he said, listen.
Correct. Yeah.
I'm taking you and your wife up, I don't even know how many feet above this planet Earth. And I don't think you want to go into a free fall. And so he said, the risk reward on this thing is so skewed. In other words, the risk is death. Okay. And so we don't take any chances when it comes to people's lives. And so, yes, I do pull it out, and I got this memorized. I dream about it, but I still look at that piece of paper. So anyway, bringing that to trading, I've got my piece of paper, and it is literally a checklist, and it is a half sheet long, and I just go down it, and it's basically 5 steps with some subsets in there. And as you mentioned as well, risk management and money management are way more important than any indicator, moving average, candlestick pattern, any of that stuff. It all starts with the math. So what's my risk reward ratio? I'm looking for some type of asymmetrical pattern there if I can get it, so that it favors me, obviously, over time. But that's basically it. Again, go by the statistics that have been proven over time, and not by what I think, not by what I feel, not by what CNBC says, or financial celebrities, as I call them. They have made me no money over my lifetime, but my little checklist, that's made me money, even when it didn't feel right. In fact, I'll even say, especially when it didn't feel right to my gut.
Correct.
So anyway, that's it.
All right, good. I think we are right on time here, folks. So let's, I love saving about 15 minutes towards the end here because we all trade a little bit differently, a little bit different sectors, and we all track different targets. So why don't, Barry, why don't you lead us off right there? Give us a good tactical trade, short-term, long-term. I mean, hell, it can be out to January of 2020. What do you like? What do you like right now? What are you bullish on, bearish? Give us a good trade that you're looking at.
Sure. Thank you. Well, unfortunately, I had to switch to another computer to get the technology working here today, so I can't show charts on this. Well, I'm not set up right now to show charts on it in this short of a time. But I did do a little research last night in preparation and came up with, ironically, 2 short plays that I'm looking at. So let me just be very clear. These are not specific recommendations of what anyone else should do with their money. But at least at this moment in time, and I haven't looked at it today, by the way, so this is from last night's research. But 2 short plays, IYM, that is basic materials. And based on what I'm seeing here, it, again, just from technical analysis point of view, it is in my method, potentially setting up for a short. Now, all my trades started out as short-term plays, and then I watch how they develop bar by bar. So I get into things saying, yeah, hopefully this will, last for a long time. But in my actual trading, I'm trading it bar by bar. So I might say, oh, this thing's got a great monthly chart and all that, but that's so slow. So I trade it based on, within the weekly and the daily. And we see what happens there. So that's one. The other one is actually the euro, but I'm looking at the exchange traded fund, FXE. And let me pull that one up here real quick on my own charts here. There it is. So what's interesting about this one is that based on my analysis, we're into a contraction pattern. So we are on the daily chart. We are stuck between the 50 and the 100 moving averages, and the 50, the 100, and the 15 EMA are all real tight together there. And that essentially mathematically means there's been no dramatic change within the last 15 days, 100 days, and 50 days. So I'm looking for an expansion of volatility, essentially. Okay. So that's what that play is. And right now, we got some mixed signals. I'm actually looking at it right now. So yeah, I'm not really clear in what direction we're going to go on this. I see some mixed signals. Last night I was thinking down, but basically I'll be looking for whatever the breakout is of that little short-term range over, say, the last 5 days. If it breaks to the upside, I'd be long. If it breaks to the downside, I'd go short.
Copy all, Barry. Simon, what's a good tactical or long-term trade that you're looking at right now? What do you like?
All right, great. So I'm going to share my screen again, and I'm going to look back and what you said, Barry, on the euro. If you have got the charts here, you go back 5 days, including today. I'd agree exactly with that. You see I have a demand zone here and a supply zone here. And again, above here, probably going higher. And if that's the case, that means the dollar is going to be dropping. If we look at the dollar on the other side of the dollar is on the other side of the euro, it's euro dollar. So if you look at the dollar in reverse, this is the dollar index. And you see today we had kind of a nice move down from this supply zone, right? And we got 2 levels here, and it bounced right off that, yeah? So again, this is the same thing. If we look at the euro, the dollar here, into the weekend or out of the weekend into the week, it looked like this may push up above, but we came down again. If you look closely on the pivot analysis, this move down made a lower low. So maybe we're going to make a lower high here, potentially, and continue lower. And this is what I'm looking at as a long term for the dollar. And I mentioned that in a webinar I did recently, that if the dollar doesn't hold this level, it's going all the way potentially down here. It could go all the way back down here. And on the reverse side of that, that means the dollar, the euro dollar, up. Let me just put it, I just lost my symbol here. Let's pull the euro dollar back up again. So again, and the reverse side, you can see this is almost the exact reverse. If this holds this level and pushes above here, then this may very well end up going all the way back up again. So that's one thing I'm looking at. Watch the dollar every single day very closely. So what I want to do now, I want to show you a trade that we took in our trading room, and I'll show you how we actually can work on the short-term timeframes, and then I'll show you a long-term trade that I'm looking at that may set up in 2017 and may end up being a very, very big move.
Awesome.
So let me pull up. This is a trade. And again, what I'm showing you here is a picture. I took this live in our trading room today, a few hours ago or so. Yeah, we did it just after the open, 8 a.m. Eastern time. so a few hours ago or so. And this is a short-term trade, and we took the trade in the room, and the target was a 2-to-1 trade. If you look at the entry, I'm showing you the picture of the trade when you make the trade. I would recommend that everyone does that. Take a picture of the trade when you do it, because you can't make decisions after you've seen how the chart played out and say, oh, well, I'll buy down here and I'll sell there. I'm making a decision here before it's happened. Yeah, so this is all I see, and I'm making a decision. I'm buying quite high up here, yeah, on the shorter time frames. Buying here, putting my stop here, and target here. So it's a 2-to-1 is around a 20 pip for a 40 pip target. So let's have a look at how the chart actually, and we go to the pound, and I have my target at 1.3415. Yeah, and I didn't get it up all the way to the zone. I took my target at 15. And you can see that was pretty much the move. The entry was, if you look again at the picture of the entry, look at it on this time frame. Yeah, you see there's 3 green bars. Now let's come and have a look and see how that plays out. That green bar got bigger and again straight up. So within like an hour and within 2 hours, it's got to the target. And that's pretty much for now the high of the day, pretty much, give or take. So this is what I mean. This is how we trade. And again, it doesn't matter what's going on with the pound. I suppose you do need to know, but for technically speaking, once you know, I'm not talking about technical analysis in a book. This is, how to read the charts from a real perspective. And again, this is a different type of reading technicals than you find in a book. So that's the idea, and that was a short-term trade, 2-to-1. So you risk whatever you risked in terms of risk management. Whatever that was, you may double your investment in that trade. Now, here's an idea for a bigger term, long-term kind of idea. Now, if we take a look, I'm going to make this bigger at the monthly chart, and I've pointed this out already before, I think on the last Timing Research show, which was maybe about a month ago I was on, and we were down in these levels, and I said, watch this level here, because we're likely, the probabilities are that we're going to go up from here. And if we do, we may see price move all the way up to this level. Okay, it may break above, if it breaks above, maybe all the way up to this level over here. And that potentially could be around 1,000 pip move with a very low risk. So those are the ideas. This is how we trade. We trade live every day. We prepare. On Sunday, we have a session where we actually prepare to trade. We go through the charts and we look at, have a plan for the week, like a game plan of what we're looking at, how we're going to approach the market. And then we just play out that plan during the week.
That's awesome, Simon. Trading is a form of combat. So you do a Sunday brief, and then guess what? You go execute the plan that you briefed. I love it. Music to my ears.
It's almost like that famous quote. Remember that famous quote? You just can't stand the thought. I think it was Jimmy Rogers. I used to have this quote on my screen for years, for about 5 years or so. I just can't. His quote was, "I just can't stand the thought of not. When you take a trade, I just can't. If you just can't stand the thought of not taking it, you've increased the odds." That's when you look at the trade and you just can't stand the thought of not taking it. That's the time to take it.
Yeah, that's exactly right. How about you, Neil?
The question is what we like right now.
What do you like right now or down the road, man? A good tactical trade, medium-term trade, or a longer-term trade?
I just have my chart up here. What I don't like, I don't like gold right now. I don't like gold. Is the chart up? Yeah.
Yeah, I got it. I can see it.
Okay, so I don't like gold at all. Gold, the price of gold moves on the expectation of deficit growth rates. And we're not going to have, at this time, any deficit increase in the deficit growth rates. If anything, the deficits are going to get smaller, and that's just horrible for gold. If I look back here at a stock like Barrick, $18 down to 13, 14 bucks. Look how well the cloud works here. You could buy some puts short here. I don't like oil at all either. And what I do like to use are the triple leveraged ETFs. And you can do something like the S&P 500, go long in that triple leverage ETF, and you can put as much as 40% of your portfolio in something like that. It's not that big a deal if you put in 40% times 3. That's only 1.2 times your portfolio. So it's almost like just buying the entire index on a tiny bit of leverage. So I like to use those two. So sometimes when the sectors are moving this way and that way, I mean, we bought U.S. Steel a few days ago a few weeks ago when I was on the show. I said U.S. Steel was going to go up. Here was U.S. Steel. At this point, we're now out of that trade. And so at this point, I'm just going for the index, really, just the S&P 500 using triple leveraged. And you can do that on a lot of the sectors. I find it works really well. That's it.
Awesome, man. Jim, do you like anything short-term, medium, or long-term?
Yeah, I tell you, I have something I'm going to talk about here that I talked about 2 weeks ago at another forum. I think that we should keep an eye on what could be the next big game in town, but certainly is not the game right now. And to the direct opposite of what Neil said, I think that people should look at the price of gold. But again, I don't disagree with him that right now it's nothing to write home about. So what my point is this, is a couple of weeks ago I said to people, we're at 14 bucks and change on Freeport McMoran. And I see that the 50-day average has crossed over the 200-day, and it looks like it might want to go someplace. And take a look. Well, today, 2 weeks later, it's up about 25%, which is not too shabby. I guess dumb luck on my part. But what I'm saying now is I heard something on a thing called Wealth Track with a lady from Eaton Vance, who was not exactly a mom and pop outfit. And she was saying that her opinion is that the dollar will weaken, which is, I think, was mentioned earlier today. And it could weaken by a decent amount. Now, the three things gold likes is inflation, and Yellen says that these low inflation rates are transitory. They like wages going up. That's what these corporations are supposed to do with this newfound money. And then, of course, it loves dollar weakness, which is what the lady at Eaton Vance was saying. And, of course, she'd be the first one to say I might be wrong. But if she's right, and the gentleman who just was speaking earlier is right, and the dollar does go into a tailspin, then you could see gold go someplace and go someplace large next year. And maybe Freeport McMoran is giving us a leading indicator. So above 1275, it would become interesting. Above 1300, it would become really interesting. And above 1363, something has occurred. So those are the three levels I would look at. Right now, definitely does not look good. But the Freeport McMoran breakout is getting me to start sniffing around it. And that lady talking about a weak dollar and transitory comments out of Yellen and all this money going to manna from heaven coming that's supposed to go to wages. It doesn't seem like it doesn't seem like gold would go way down if those three things occur. So that's my next possible big thing, but it's certainly not happening today. But keep an eye out for it in 2018.
Awesome, Jim. I like it. All right, I'll round us up here with final few minutes. I am really, really, really bullish on Raytheon, and this little pullback today is a gift. This little pullback on Raytheon. I like the defense stocks, folks, and here's why. President Trump signed a $700 billion defense package, folks. Even though I think it was Neil and I talked about potentially peace breaking out in the world, that ain't necessarily the case. We got North Korea. At one point, we had three carrier strike groups, 3 CSGs. I knew the guys who captained all of those and the commanders of the air wings on board there. So let's just say that North Korea ain't going anywhere. And there's a little country called Iran who's been watching every move that we're doing with North Korea. North Korea's allowed to keep nukes. Iran's going to get nukes. Saudi Arabia can't stand Iran. Iran's provide. Did everybody see last week Nikki Haley, who's going to be our next Secretary of State, in my opinion, was standing in front of a Iranian missile that was fired from Yemen at the airport in Riyadh. I've been to the airport in Riyadh. I was stationed in Riyadh for 3 months. Imagine if that happens. What am I rambling on about? My strategic mindset, my commit criteria. I like Raytheon in the defense sector. I mean, this is why I opened the chart up a little bit. This is Raytheon under Obama. Obama ain't no super, let's spend money on defense dude. As a matter of fact, sequestration completely gutted the Department of Defense and actually resulted in a lot of mishaps, in my opinion, that got sailors killed in the Pacific. I digress. I think it's going to be very, very bullish under Trump, the defense sector. Why not a Lockheed Martin, a Boeing, a General Dynamics, a Northrop Grumman? Those are why? Because a Raytheon is in all of those things. A Raytheon is instruments. I sat behind a Raytheon radar for 15 years. This little pullback was a gift here with earnings, and then we've been doing bull put spreads. We have a Jan 20, what's called a long call diagonal with protective put on Raytheon that's up about 20% in 2 months, which is phenomenal, huge. And then we've been doing bull put spreads underneath this this nice uptrend. Just take a look at a 1-year chart, a Raytheon, a 2-year chart. Right there, man, defense stocks. Even though we did obliterate ISIS, they're roaches, man. They're going to scatter and go to other places. And unfortunately, the other places are the subways in New York, or maybe even the mall here in Boca Raton. But you got to get into the defense sector, folks, because if it was looking good under Obama, just imagine what it's going to be under a Trump presidency who wants to rebuild, using his terms, our military. And don't forget, as he gallivanted around Asia, was it last month? South Korea, Japan, both said, we're going to buy a ton more of stuff. And oh, by the way, speaking of Saudi Arabia, what was it, $110 billion defense authorization the Saudis are going to be buying from us? Get into a defense stock, folks. And if you like the defense sector, Raytheon's where you got to go because they're in everything. And with that, I'm going to give myself a golf clap because I finished right at 2 o'clock to an hour, and that's called superior execution. All right, guys. So let's go around the room. Barry, give us a heads up how we can get a hold of you at Top Dog Trading and what you do.
All right. Well, thank you very much. Yeah, this was a great show. So a lot of great stuff there. I even took a few notes myself. So topdogtrading.com is my website, and I would just invite people to go there. They can see a lot of great, that's actually my blog. So that's not a sales site. And we offer a lot of free tutorials there. You'll see a lot of free videos on all sorts of different topics, everything from Forex to Bitcoin to options to, but it's all about technical analysis. So a lot of good free stuff there. And that's what we like to do is educate people for free into our program so people can test drive what I do, make sure that it's a good fit for them, make sure it's logical and fits their needs. So lots of great free education and topdogtrading.com. And again, what I do is measuring basically the power of money flow via technical analysis in a very objective manner. And that's why it is so robust and adaptable to various markets, whether you're a day trader or swing trader. So go there, get all the freebies and enjoy.
All right, Barry, thanks. Looking forward to working with you again. Simon.
Okay, so let me share my screen again. Just updating my website a bit, so it's looking a bit better now, I think. So you can go to my website, tradesmartforex.com. And again, if you want to learn how to build a profitable trading strategy step by step, just put your details in and you get a free video. It's about 15 minutes long, and it'll give you the basics of how to build your own trading strategy, what you need to go through step by step. Also, we have a blog here, and you can sign up, get on my list, and every time we do a free webinar, we do maybe once a month, and you can get on and come and watch a free webinar and learn about supply and demand. You can watch any of the videos here, and they're on my YouTube channel as well. These are the videos. Where is the dollar going next? I put those videos out every Sunday, usually before the market opens. And you can go and see, we actually go through the odds and the probabilities of where the dollar's likely to go next. And that's looking at the DX. And we're pretty much spot on. You can go and look at every single video and the one that came after it and see what happened. And you see that almost every single one, we've said almost every single one, not every one, which way the dollar's likely to go next. Pretty spot on. So if you want to learn a bit about my approach, our approach to reading the charts and everything, see it in action in real time, go and watch one of those videos before the market and follow and see what happens. And that way you can start to get a little bit of understanding of how we approach the market. It's very simple. As I say, you want to keep your analysis simple. You want to get more sophisticated on your trade management and risk management. That's where the money's really made in professional trading. You know, the trading ideas can be very simple. What you want to do is work on more sophisticated trade management to actually, for example, adding to a winning position as opposed to what most losing traders do, adding to a losing position. We want to add to a winning position, as in let it pay you more. If you're in a good trade, add to it at some point, at the right point. Anyway, so that's how you can get in contact with me. And I'm very, if you want to have a chat, you can connect with me, send me an email, simon@tradesmartforex.com. I'll be happy to set up a time to speak to you. Okay, thanks a lot, Matt.
You bet, Simon. I appreciate it. Neil, over to you, my friend.
Sure. Yeah, you can go over to traderreview.net. You can sign up for my newsletter there, and you also get a download link to a calculator. I'm really big on position sizing. I don't use the same amount every time. The calculator, what it'll do is it'll tell you what % of the portfolio to put in compared to the stop point, so that if you are stopped out, your whole portfolio will only drop 1% or 2%, whatever setting you put in the calculator. So if you have a real volatile pick, you put in less. Basically, if it's a not such a volatile pick, but you have a perfect entry point, you're going to put in a lot more. And so I think that'll really benefit traders. That's all.
All right, man. Much appreciated. And Jim, the options professor.
Yeah, what I'd suggest people look into is contacting Option Professor to learn a little bit about options, obviously, but also learn about some of the defensive tactics that might come in handy. You know, just today in the first hour, we went up to almost 25,000 on the Dow, 24,876, and we're about 100 points lower. So if you had a setting in there giving you parameters on your position, you know, you wouldn't be in there going, did it top? Did it not top? Should I stay in? Should I not stay in? You'd have something going around your position where you'd have some confidence of what the values could end up being. So that's why, again, the defensive strategies can give you a lot of confidence, because you know what the worst case scenarios could be. And Option Professor contacted at optionprofessor@gmail.com.
Awesome. Thanks, Jim. Thanks for coming. And folks, it's really easy to get a hold of us here at TGO, or to take a 2-week test flight into what we do here at Top Gun Options. You can head to our website, topgunoptions.com, if you're a skier, or even if you're not a skier and you have some semblance of gray matter between those 7 inches. Take a look at the beginner, intermediate, and advanced trials. Beginner, that's more of our accelerated retirement portfolio. A little bit more longer dated. We look at Jan 19th, Jan 20 trades. We have a lot of great trades rolling off the books. We have a lot of Jan 18s that we've had on for like a year and a half. These long call diagonals and synthetic stock. JP Morgan, Morgan Stanley, Facebook, and Apple. We're looking at anywhere between, I think the lowest is like a $32,000 gainer, and I think our Facebook's up in the upper 40s. That's a year and a half trade, folks. I mean, that you know, some people make that in a year. We're making in one trade. Intermediate, that's where we trade the front month, and we do a lot of hedging as well. We kind of all dropped it out of our scan today, even though I know we're all, as professional traders, we got one eyeball on it. The VIX, man, we're down, what is it, 922 or something the last time I looked at it. This is stupid cheap vol. So we trade volatility in the intermediate portfolio. And then advanced is where we trade our weekly options. Had a nice 100% winner last week, $1,400 trade on Amazon, a bull put spread. So for all my weekly options traders who are in here, since we didn't have our 1 o'clock session, keep an eye on your text and your emails for a weekly options trade that I'm going to send out right out after this. So, and I think we're good to go. All right, David, I'm going to throw the controls back over to you. Thanks for having me, and I look forward to being back soon.
All right. Thanks, everyone. For those of you watching, be sure to hit the YouTube subscribe button if you haven't yet, to get updates on future shows. Also, be sure to join us tomorrow night, December 19th, 9 p.m. Eastern Time, for Analyze Your Trade, episode number 16. I'm going to have Oliver Schmalholz, Lance Ippolito, Tim Jenkins, and Kenney will be back for that one. Also, tomorrow night, that'll be the last Timing Research show of the year. The next few weeks are going to be going on market holidays, so we'll be back on after tomorrow night. We'll be back with Analyze Your Trade on January 2nd, and the next episode of this show, Crowd Forecast News, will be back on January 8th. So just want to thank all my guests again for this week. Barry Burns of TopDogTrading.com, Simon Klein of TradeSmartForex.com, Bill Batho of TraderReview.net, Tim Kenney of OptionProfessor.com, and Matt Buckley of TopGunOptions.com. Thanks, everyone.
Thanks, David.